The best stocks to invest in right now. Jerome Powell, the chairman of the Federal Reserve, has promised that he and his fellow board members will continue to raise interest rates until they are absolutely sure that inflation is under control. Powell made it quite evident that controlling inflation is the primary objective of the Federal Reserve. He stated that the central bank will continue increasing interest rates and shrinking its balance sheet for some time, even if doing so would involve experiencing some pains and downs. The Federal Reserve has been steadily increasing interest rates throughout 2022 in an effort to slow the pace of the American economy and bring down overall costs for consumers without triggering a new economic recession. However, so far, their efforts haven't made much of a difference, with inflation hovering close to a 40-year high last month despite their best efforts. The stock market has been going through some pretty wild times recently, especially with the pandemic. Even more so with Jerome Powell's comments about Jackson Hole. Hi, I hope you enjoyed my previous video and are happy to be back. Welcome back. Or if you're just joining us, we're Finance Bureau, your one-stop destination where we talk about anything related to cryptocurrency and finance. I'm glad you could make it. For this video, I will talk about the best stocks to consider investing in 2022. Let's get right to it, shall we? So, Powell's speech led to a big drop in stock prices, as well as a whole host of other economic factors. Since the speech, the S&P 500 has fallen on each of the 3 trading days that have followed, and it is currently down more than 5% from where it ended. Over the same span of time, the technology-heavy Nasdaq, which is more susceptible to changes in Fed policy, has experienced a decline of about 7%. It should come as no surprise that the future of stocks is riddled with quite a bit of uncertainty right now. Because of the state of the economy and the outlook, the markets are in the red, and the price of many stocks is expected to continue declining. Despite the fact that now is a terrifying time to invest due to the possibility that the markets will continue to decline, it is still possible to make a profit. Despite the fact that China's economy is growing at a far slower rate than projected, and the United States is entering a recession as a result of a decrease in consumer spending, there are still some industries that will experience growth during a recession. Don't let the recent troubling economic news and talk of a recession get to you. Maintain a positive outlook. For this video, I will talk about options that are meant for the long term. All of these companies have the potential to either go up or down in the short term. Moreover, remember that these are only recommendations, simply a suggestion that you conduct additional research. I strongly urge you to research each company and to come to your own conclusion regarding whether or not you wish to invest in that particular company. This video is not intended to be taken as financial advice. It is not a good idea to buy a stock simply because it was mentioned in this video. This video is nothing more than a personal analysis. Now that we've gotten that out of the way, let's move on. Now, there are 4 things that consumers continue to spend money on during a recession. 2 of these categories will actually see an increase in spending during a recession, while the other 2 categories will see no change in spending during a recession. Alcohol and gambling are 2 industries that are expected to see growth. Casinos and stocks of alcoholic beverages, including beer stocks, among others. On the other hand, people are unlikely to reduce their spending on beauty and pharmaceutical products, even during a recession. The beauty products retailer is on an attractive growth path. People are spending a significant amount of money on makeup and beauty goods, which is beneficial to the businesses that sell these items. Analysts attribute the increase in cosmetic sales to challenging economic realities because individuals prefer to indulge in inexpensive splurges. Here are some of the stocks you might want to consider. The Estee Lauder Companies Incorporated. The earnings growth of Estee Lauder Companies is anticipated to be in the teen range in the years ahead, indicating that the company has a good future ahead of it. This should result in healthy cash flows, which should contribute to an increase in share value. Ulta Beauty Incorporated. The most recent earnings report for Ulta Beauty, which was released in June 2022, provided stockholders with several reasons to be excited. In its update for the first quarter of the fiscal year 2022, the retailer of beauty items stated that it is still growing revenues at a solid pace, with more individuals engaging in more in-person interactions. Walgreens Boots Alliance Incorporated. which not only includes cosmetics but also includes pharmaceuticals. On a comparative scale, the stock price performance of Walgreens over the course of the most recent couple of months has been decent because of the company's strong financial performance in the second quarter and its lengthy history of positive profitability. WBA share price has not lagged behind the overall market in recent months. Here's another reminder. In the end, the decision as to whether or not you should invest these company stocks will come down to your specific objectives, level of risk tolerance, and allocation. This is not a financial advisor channel, so do your own research or get in touch with a financial advisor before actually investing. None of the stock picks mentioned are a recommendation to buy, sell, or hold. These are just opinions which may or may not be accurate. So moving on to the video, you should also consider Etsy. Etsy was doing well before the COVID-19 pandemic because it helped creative individuals find buyers who are interested in unique items. Due to the outbreak, online sales skyrocketed. Etsy, on the other hand, took off like a rocket, expanding at more than double the rate of all e-commerce combined. Etsy's rapid expansion is remarkable since the company started off selling handmade goods alone. The second quarter of 2022 saw a 141% increase in marketplace sales volume on Etsy compared to the same period prior to the pandemic. Etsy has only begun to scratch the surface of its market opportunity, which is estimated to be in the hundreds of billions of dollars, given the power of its platform and brand. As a result of the current decline in growth stocks, the stock price has dropped dramatically, making it good for long-term investors with patience to venture further. What do you think so far? Do you have recommendations of your own? Please feel free to share your thoughts and discuss in the comments section below. But always remember to be nice to each other and respect the opinions of others. Another company that you should also look out for is Airbnb. Airbnb has benefited from the enormous surge in vacation demand that has swept the United States in recent months. Keep in mind that many of us had to postpone or cancel vacations and trips during the initial stages of the pandemic, but now that we are free to travel again, we are planning and going on the vacations that we didn't get to go to during the travel restrictions. Now, consumers are slowly releasing their pent-up desire for travel, which has resulted in the company's revenue increasing by at least 57% for the past 4 consecutive quarters. Airbnb's trailing 12-month revenue has increased to $7.4 billion, and the company's operating income has also increased to $1.3 billion. The stock is selling at a low price in spite of the company's impressive financial performance. Given Airbnb's dedication to innovation, not only does the near future appear promising, but so does the far future. Because of this, the corporation may be able to gain market share from competitors that aren't as concerned about their customers and hosts. When combined with Airbnb's consistent ability to turn a profit, it appears to be in a position to dominate the market in terms of innovation. Last August 16, 2022, following the release of the company's earnings report for the third quarter, shares of Disney recently surged to their highest levels in over 4 months. One of the most compelling arguments in favor of buying Walt Disney Company stocks is that the company's theme parks are roaring back to life and are in better financial condition than they were before the pandemic. If the economy enters a full-blown recession, Disney may encounter unforeseen challenges, yet the company has successfully recovered from a number of economic downturns in the past. Not only that, but Disney's streaming services are seeing great success. 2 massively successful sequels to films that brought in $1 billion for Black Panther and $3 billion for Avatar will be released later this year, providing another catalyst. If their sequels perform as well as their originals, it will be a huge boost for Disney in the second half of the year or the last quarter. As a long-term investment, these stocks seem good. The next several weeks and months hold complete mystery as to what they will do. There is a real possibility that most or all of these may decrease in the near future if inflation remains high for longer than projected or if the United States enters a recession. So are these the most promising companies for an investment at the moment? Certainly not in every case. Even if these are the stocks that are performing well, does not always suggest that they are the most rewarding stocks to invest in. Even the most experienced investors struggle to accurately forecast the future performance of even the best performing stocks in the market today. Moreover, The greatest stocks for your portfolio might not be the same as the best stocks for another investor's portfolio. As an illustration, a younger person aiming to develop their assets for retirement in a more aggressive manner would lean toward growth stocks because of these investments' high risk, high reward volatility. On the contrary, a retiree searching for passive income would opt for the dividend aristocrats, who are reasonably stable and have a history of consistently growing their dividend payments over time. So what worked well for you might not be everyone's cup of tea. Your current financial condition should play a major role in determining which stocks are the best to buy right now. If you want to learn more about investing, feel free to check out my other videos to gain an idea of where you stand. I hope it will guide you through financial decisions, including knowing when to invest in the stock market. If you're just starting out, it's best to focus on the stocks that interest you the most. Just so you know, Finance Bureau is not a financial advisory channel. Never consider anything you see here as professional investment advice. No information provided verbally, in writing, visually, or otherwise is intended as a recommendation to purchase, sell, or hold any asset. All of these convey opinions that may or may not be true. Before putting your money into anything, please conduct your own comprehensive research. What about you? What do you think? Are these the best stocks to invest in right now? Let me know in the comments. If you enjoyed this video, I'd also appreciate it if you hit that like button and subscribe to my YouTube channel to tune in for more financial and crypto content. See you on the next one. Thank you for watching.